All right, ladies and gentlemen, I hope you had a wonderful day. It was another ugly day on Wall Street. The bonds got killed again in the morning. There was bad news out of Medicare that clapped the healthcare stocks. Tesla had a huge delivery miss, even in Europe. PVH, the clothing company, gave a huge guide down for next quarter. And all of this happened before the bell and even before the JOLTS jobs data. So, Chad, this was a pretty big deal today. It was almost a 1% sell-off across the board. The Russell dropped too, and what it is being blamed on is rate cut fears, and once again, the market is getting worried that Powell will not cut rates as many times. Now, this should make you scratch your head. Why? Because over the last several weeks, you have watched the rate cut odds pull back heavily, but all the while, your stock market has rocketed up, and now all of a sudden, people are talking about it. The bonds made another huge move towards yearly highs today, and now we're even trading lower than the last SEP. So why? Why? What just happened? This should be making you ask some questions. So, Chad, that's what we're going to talk about. I have that recap for you. I have the plays, all the good stuff. What I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. YouTube.com/The Stock Market. We will see you there in the morning, baby. Run it.
Working to the couch, it's the 2020 election. Live in the hills, but still get a spread. Started with a live, but still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
Right off the bat, before we get into the keys, what you really got to notice about today is that before any of the jobs data, the big data came out, you were already gapped down about 40 points on the SPX. Same goes for the bonds, and they kept selling off right after open. If anything, it was the JOLTS jobs data, which came in line. You also had manufacturing data and durable goods. That was also a little bit mixed, but for the most part, the JOLTS was almost exactly the same as last month. It stabilized a little bit, and we stopped moving down from there, but once again, we woke up, we make a big move, and even though there's a lot of things you could throw it at and blame it on, most of the move was occurring in the morning right when we went out, and it was for a lot of other reasons. And what a lot of people were saying today was this was even a continuation reaction off of the hot data yesterday. But all in all, what it got chalked up to, rate cut odds went back. The bond yields now, TLT, the 30-year bond, hit above 4.5% today. I even think the 10-year bond is hovering right below 4.5 and making its trek up there. And if you aren't understanding what this is meaning or what I'm saying with this has all been a response now finally to all of that hot data. It is now getting reflected. Inflation fears, it's being reflected through Fed futures, and now even the 10-year bond, even the 5-year, the 10-year, 30-year, the 2-year is the only one. So that's what leads us now into the first key, man. What you saw today in this little reaction 2 days in a row, or actually even lower than last week and lower than Powell, nothing really changed. The data did not change, but the thing is, things hit differently when yields start to climb above 4.5%. So, like I'm telling you, you saw that happen today on the 30-year bond, but this is something I've been bringing up forever now. Anytime we get above 4.5, the market starts to trip out a little bit. And think about it. This whole year, yields have gone up. The market has gone up. This was even Powell in that December 13th. The 10-year bond is now above that. So what do I mean by things start to hit differently when we get above 4.5%? Well, now maybe you actually start reacting to this data, hot data. Maybe this is the threshold where it is hard for the market to keep ignoring bonds. So if anything, the thing I kept saying today, and I just pointed it out, right now after this move these last 2 days, and now with this data on the way, depending on what happens this week and even next week, because we get CPI, we want to see where bonds end up and how it affects the market, because as of now and after today and this little move, bonds are one of the only few asset classes that are trading lower than Powell's December SEP. The Fed is going to start cutting. Go look at gold, the dollar, the market. They have all made gigantic moves, even crypto, and they have never looked back since there. So did the yields, but now everything except for the 2-year is back lower than Powell, meaning even though the Fed and the dot plot saying rate cuts and all of that, right now, the bond yields right now on government bonds, 5-10 years out, even 30 years out, they are substantially higher than where the dot plot is at. Maybe this is reflecting higher for longer. Maybe this is reflecting those inflation fears coming back. So that's what categorized a lot of the fear that we got today leading into tomorrow. Now, it's kind of a good setup because you still have big data. We get ADP private payrolls. We'll see what that does. If it packs more of a punch, the jolts today had nothing, so maybe we'll get a move. And then you also get ISM services. If people were blaming things on ISM manufacturing from Monday, this should really pack a punch. So watch if it moves the bonds. And like I'm saying here now, we may get a little bit more sensitive market-wise on data because now if data has the ability to start moving the bonds, if that's going to be the dagger for the 10-year, aka it going above 4.5 off all of the data this week is not helpful and it leads to 4.5, the market's probably going to start reacting, and vice versa. If we kind of pull up here and have another one of these pullbacks and we calm down with the data, then you may see the market calm down if the bonds can calm down. So this is a very big deal. The final thing I will add to it before I get to the last key, just to give you an idea here, it's not much, but people have noticed it and are bringing it up after these last couple of days here. Just keep in mind the move index. You haven't seen the bond volatility pick up, and lately it finally got this thing moving. So we'll see if that wakes back up again. But all in all, data that should give us something. We'll see how it strings in with everything else. And once again, we're asking ourselves, is the 10-year and are the bonds going to go to 4.5 and higher? And are we really now believing that Powell is going to cut rates 3? You may start hearing about 2 very, very soon. So it all depends on the data. Data dependent. But now the final thing, it's kind of what I was just saying there. Watch for the narrative to shift. If everybody wants to start talking about a higher or lower amount of rate cuts, depending on how things come out into this quarter and how we move forward, I would be mindful of it. You definitely woke up and everybody being worried about something we obviously saw happen days and weeks in advance. So watch out for that. But the thing I keep saying is that this week now, watch for the dagger on rates. Some things can help or hurt the bonds a lot this week, but also even next week and then the week after that. And then before you know it, it's Powell in April. And then those June and July meetings, oh man, that's where it really heats up. So just don't forget. A lot of jobs data this week. We even get to hear from Jerome Powell tomorrow. And we'll see if he says anything. But then you got non-farms on Friday, CPI next week, the start of earnings, and then Jerome Powell. So we'll see where it all takes us, but definitely a wild day. And I mentioned gold hit another high. Yeah, add that to the list. 2,300, another record high. But now let us get into the plays. So right off the bat, I got a couple of different plays. I didn't make any plays today. I just wrote a lot of what I was holding from yesterday. That CCJ ended up doing good, so I like that. But starting here with UNH and Humana, I still got old Humana shares. Remember I played the buyout? I got merked on those. I think I grabbed 50 shares. I'm down a lot from the beginning of the year, so I'm still in this on like a weird messed up swing. But the news was big today, and honestly, it just wasn't expected. People thought the Medicaid numbers or Medicare numbers were going to give them a lot more money or like 100 basis point increase, and that didn't happen. It came in unchanged. So that got people off guard. Humana paid for it. So did UNH and Cigna. But what I'm going to look for is a slight continuation. Unexpected news, it'll hit. But then even Humana, we flipped some of these options last time on earnings. These are prone to bounce, and then depending on how things play out even with the market, there could be a good play here. But this was a big piece of news. I would watch out for this. I don't think it's done. You may watch some action here over the next week or so. So keep your eyes out on these names, these healthcare ones. That is play number 1. Then play number 2. This one I like. I got 2. I'm attaching 2, so there's already 4 plays, but Marvel and Intel. So 1, don't forget about the AI event with Marvel. That's April 11th, and there's a couple of names that are already attached for it. But somebody asked me, they're like, what about AI stocks and AI news coming up? And I was like, honestly, I don't think there's been any like recent chip news besides what we got with like Nvidia, the Blackwell, the earnings, and Broadcom. If you remember, there was all that hype towards the end of earnings, but lately we don't really have any news planned out. If anything, this Marvel event, that one's the only thing right around the corner. Chad and the person asking the question, they brought up TSM. You will have their earnings in 3 weeks, so it's a little less immediate, but also right around the corner. And then even today, this is why I have Intel on the plays. They had a business update after hours. They were talking about foundry cost and what they plan to make. It looked like a year-over-year decline. I thought they'd bury some good news in there, but the stock is down now after hours, so we'll see. If anything, this may give some news to the chip space tomorrow. Watch if we get off to a slow start with chips or if it affects anybody else besides Intel or just them, but watch out for that. I'm still in my Marvel shares. I'm up like 5%, 250 shares, so got a nice little gain there. So going to be riding that out until the event. Might sell out right before or right after they announce something, and then it pops and goes crazy, and then we will be good to go. But watch out for that. That is play number 2, and then finally, play number 3, baby, Tesla. Their delivery numbers today, man, it was really bad. It came in at like 380,000. Expectation was 460,000. I believe it was one of their worst delivery numbers since 2020 and COVID. So I don't think it was good, and honestly, I think they're going to make another test of 160. They haven't had too many good things coming out, and we talked about this prior. Tesla delivery numbers is like its earnings, so watch for a continuation play. That's why I think it could go lower, but if anything, I want to watch this premium drain a little bit. We were talking about it all day. The premium was still kind of jacked up compared to what it was pricing in the day before, so we do got to watch out for that. But if these premiums calm down, going to kind of treat it like an earnings play, and I really think you might be able to get a continuation, so watch out for that. I really think that'll be a good one. But besides that, the only other things I'm watching, gold and oil, man, the Iran thing from yesterday in Israel, that had an impact. People are getting worried. That is factoring into oil. Some people even talking about SPR release ahead of the election. That's a whole nother topic. And then gold. I mean, dude, that thing hitting, people are getting worried about a couple of things as well as watching what is going on. Even bonds are worried about supply and fiscal stuff and just all of these tensions, whether it's geopolitical or even like fiscal and governmental. That's the wildest part about all of it. But keeping my eyes out on these. Still got a couple of biotechs we've been riding out, and we'll see if we can make it out of all of this into the next earnings season, because depending on what this data does to the bonds, earnings season is going to be the next wind, or maybe the bonds is the judgment day and it just decides everything for us for the next quarter. Who knows? We'll find out. But Chad, that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, baby, regulating your emotions. That's what's going to separate you. Many people in life, you separated by how you regulate your emotions, Chad. Trading the business to life. It's all on that. So always be mindful of it and stick to the principles, baby. But Chad, I love you. Drink that water. Stay hydrated and healthy. Get some good rest. I'll see you in the morning and horn.